Good morning. Happy Friday. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The yen weakens after the BOJ holds rates and says it will lay out plans for reducing bond buying at its next meeting. We break down the numbers ahead of Governor Ueda's press conference. The S&P notches a fourth straight consecutive record. European futures point higher. This as the French bond rout deepens amid concerns over a surging far right in upcoming elections. Reform UK leader Nigel Farage declares his party the opposition to Labour after a new poll shows the Brexit architect ahead of Prime Minister Rishi Sunak's Conservatives. Let's check in on the markets. Yes, political risk here in the UK, but more prominently in the Eurozone continues to be a feature. But stateside, you did get that fourth straight record for the S&P, powered by the gains coming through from Broadcom, from Adobe. It's the technology story once again. A left as well for Tesla after the AGM approves the pay deal for Elon Musk. Still some questions, of course, for the executive going forward in terms of whether that money actually comes through to him. European futures, after a challenged week because of that political risk, pointing to modest gains of 0.3%. You've seen a divergence this week between the European stock story and the US stock story. FTSE 100 futures pointed to gains of 0.3%, looking to add 27 points. S&P futures currently flat again after that fresh record above 5,430 by the end of the close yesterday. Nasdaq futures looking to gains and build on the upside of yesterday, pointing higher by 0.2%. Let's flip the board and look cross-asset then. Of course, the Japanese yen is in focus for us today. We'll break that story down for you in the next few minutes in detail throughout the show, in fact. But briefly reflect on the auction of the 30-year yesterday in the US. Well absorbed, $22 billion at the long end, well absorbed by the markets. The 10-year yields up just 2 basis points in the session so far, but still comfortably below that 430 level as markets start to price in potentially around 48 basis points of cuts from this Federal Reserve, 426 on the benchmark. There's the Japanese yen. Pressure coming through then as they kick the can on the bond purchase program. 157, currently down 0.6% versus the US dollar. Euro dollar at 107. Of course, the single currency has been seeing some volatility on the back of the political risk emanating predominantly out of France. Brent, $82 a barrel, down 0.4%. Let's cross over then to Asia. Standing by for us, Avril Hong in Singapore for a breakdown of the Asian markets. Avril.
Yeah, Tom, it's really about the yen and the BOJ. I mean, coming into this meeting, the expectation was that the central bank would do something to help bridge that yawning yield gap with the US and support the Japanese currency, maybe talk about the reduction of bond purchases, signal rate hikes. That's not what we got. Kicking the can down the road, as you say, we're only going to hear about its plan in July. In the meantime, it's going to be consulting with banks and some of the other parties what this plan for reduction of bond purchases should actually look like. So a less hawkish than expected BOJ, and the dollar yen is creeping back up towards intervention levels, hovering just under the 158 now. And we are also seeing, interestingly, in Japanese bonds, they were already in quite a good mood because of the Treasury rally overnight, and they're seeing further gains because of the signals that are coming through from the Japanese central bank. The yield on the 10-year now, pairing some of the earlier climb, but it is about a 4 basis point move. Now, let's talk about what we're seeing in the equity space as well, because as you know, given how this messaging from the BOJ, flip the board if we can, coming in a bit less hawkish, it is taking some of the risk off the table for equity investors. The Nikkei was down about 0.4% earlier on in the session before the BOJ decision dropped. It's managing some gains now, but don't forget, this is a benchmark that since its peak in March has really been struggling to breach the 40,000 level. What happened to those expectations of inflation creeping back into Japan and how corporate shareholder value seemed to be unlocked? That is going to be key to watch, even though chip stocks are expected to continue doing well, whether the climb in equities can continue broadening out. I think that's key to watch for Japanese equities. Chinese ones today coming under pressure. Let's flip the board as well, because when we look at the yen, it's today weakened against all its G10 peers, but also most of its counterparts in the Asia Pacific. Key among them, the yuan and the Korean won. Makes you wonder what these economies are going to be thinking about in terms of export competitiveness. How long will the likes of the PBOC tolerate this? So really today, focus on the BOJ, focus on the yen, Tom.
And we will. We'll get more on that. I love that regional comparison in terms of the FX pairing. Avril Hong in Singapore with a market check. Of course, thank you. We stay on the BOJ story. Avril has set down the order there, and we're going to stick on this. Let's get more details in terms of that BOJ rate decision. Bring in Bloomberg's Brian Fowler. Brian, not a big surprise, of course. That was expected that they would hold, but they're kicking the can in terms of the details on the bond purchase programme and to what extent they're going to reduce that. And one interpretation was this is a relatively dovish announcement or detail from the BOJ. We get the governor and Ueda and the press conference at around 7:30 UK time. What are you going to be scrutinising from that press conference? Are we expecting anything? We're talking about the softness in the yen once again in the session, down 12% versus US dollar year to date. Will he come out with anything to support the Japanese currency?
Yeah, this press conference in 90 minutes is going to be hugely of interest to people, to investors and traders in yen and Japanese assets. And what we expected before this decision was to see some hints about a potential rate hike coming in July. And so we were going to be looking for comments on the likelihood of achieving that 2% stable inflation target, or maybe something talking about the underlying trends of inflation rising. That was what we expected to hear. And now there's all sorts of other things to think about. The fact that the board voted, only one board member voted against cutting bond buying suggests that there's a broad consensus to do it. But the fact that they couldn't come out with details may point to some disagreement in terms of the scale at which they should do it. So we'll want to hear about any kind of comments that were made at the meeting regarding the possible scale of the bond buying cutbacks. And then we will be looking at the yen. Of course, 2 months ago, after Ueda came out with comments that conveyed not too much urgency about the yen weakened, and we then saw Japanese authorities come in with record intervention. So he's going to be cognizant of what happened 2 months ago. We'll be watching very closely to see if he somehow tries to put a floor under the yen in his comments today.
OK, and Brian, on the question and the important question of the bond repurchases, the bond purchases, and to what extent they're going to rein that in, they're going to get the detail. They're going to give the details, you say, after that July meeting. What is the market expectation? What is your expectation? What does history tell us in terms of the guide as to how far they can go, how comfortable they would be going with that quantitative tightening programme?
Yeah, so we've heard estimates from, it's currently 6 trillion yen was what the monthly purchases were. And we've heard economists talking about cutting maybe 500 billion yen or all the way up to 1 trillion off it. They're going to, when they do lay out the details, they're going to be talking about the next 1 to 2 years. They may also hint at what's going to come after that. We've already seen the Fed embark on its QT path 2 years ago, and it's already started to slow that. So I guess the BOJ will tell us, maybe, start out big and then slow it down further out. The market's a little bit lacking in consensus in terms of how far they should go, and maybe that also explains why the BOJ itself was reluctant to come out with specific details today.
OK, Brian Fowler, excellent breakdown of what we've been hearing from the BOJ and what to look for, importantly, in terms of that press conference. As we look at Japanese yen, currently at 157.97, down 0.6% versus the US dollar. Brian Fowler joining us out of Tokyo. We are going to go now to Oliver Crook. But before we do that, let's give you a sense of what else is lined up for today. Before we get the geopolitics and the focus on the G7, 7 a.m. UK time. Tesco's sales and revenue, of course, the grocer here in the UK, and that will be an interesting guide in terms of the health of the UK consumer, I should say. We've been focused, of course, on the US consumer as well, but the UK consumer, as we start to adjust expectations around the Bank of England and when the BOE can go. Bloomberg Economics expects them to be able to go in August, but a gauge on the consumer coming through then from Tesco's, that key grocer here in the UK. 7:30 a.m. UK time, we do get that press conference from the Bank of Japan governor, and as Brian Fowler was suggesting, there will be scrutiny on what he has to say about that bond purchase programme and whether or not he guides in terms of future hikes for the BOJ. Bloomberg Economics expecting still 2 further rate hikes this year from the BOJ. 6:30 p.m. UK time, we're going to get some details. Christine Lagarde of the ECB will be speaking. Also interesting, given the uncertainty around the next steps for the European Central Bank. So certainly tune in to that. You can get, of course, a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go. Coming up, Nigel Farage versus Rishi Sunak. We explain why the Reform UK leader calls his party the opposition to Labour. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Friday, by the way, everyone. Now to the geopolitics. G7 leaders meeting in Italy. They've reached an agreement to unlock a $50 billion loan for Ukraine by using the profits from frozen Russian assets. We know they've been wrangling over this for a number of months. The final technical details are yet to be ironed out, but the fresh cash is expected to reach Kyiv by the end of the year. Big boost then. The leaders say it is a strong signal to Russian President Vladimir Putin that he cannot outweight the bloc in the conflict.
We have agreed to have a 50 billion euro support in addition for Ukraine. This 50 billion euros will be fed by windfall profits from immobilized assets in Europe, Russian assets in Europe.
We have an in-depth agreement today, and it's a very powerful message. And it will be the task of the technical team in the days to come, in the weeks to come, to put it to put it in concrete terms. But the orientation is very strong, and all the leaders, we want this agreement to be implemented.
OK, for more, let's go live to Bloomberg's Oliver Crook on the ground for us in Italy. Been following this event from the start. Ollie, talk to us then about the significance of this G7 agreement in terms of using the frozen Russian assets, the profits, the gains on them to aid Ukraine. When does the money come through? How significant is it in terms of the material impact on the ground for Ukraine?
Yeah, well, Tom, listen, if it does come through, and they hope to get it to the end of the year, before the end of the year, into the sort of Ukraine wallet, $50 billion based off of those Russian assets. And again, Tom, this is something we've been talking about for weeks. And so what we have now is an architecture for what this would look like, bilateral loans that are sort of contributed to by the G7 members as a proportion of their sort of GDP. And they really want to get that to Ukraine before the end of the year. Conspicuously, Tom, because at the end of this year, we have a big election in the United States that they really want to try to Trump-proof and get that financial footing for the war in Ukraine on solid ground for the future. The problem is that there's still the devil in the details, Tom. Not to pour sort of too much cold water on this, but we keep talking about the technical details need to be worked out. The technical details need to be worked out. There is a lot of questions still that surround this. So, for example, in the EU, this whole system, this whole approach is based on the EU continuing every 6 months to renew the freeze on those Russian assets. And by the way, Tom, in order to do that, you need full unanimity among the EU members. Could Hungary, for example, throw a spanner in the works and prevent that from happening? These are some of the details that need to be worked out, and the EU sort of really needs to look at and find ways to perhaps circumvent that. But you know, overall, Tom, this was sort of the big deliverable in order for the G7 to say that they're strong. There was also this sort of spectacular skydive show yesterday where these sort of parachutists jumped out of helicopters as the leaders were below, each with the sort of national flag. But you know, afterwards it broke out into press conferences. I went to the Macron press conferences, and you know what? There's the skydive that he took politically himself, and that was really the focus there, right, Tom? And the journalist asking about that, and really sort of speaks to some of the sort of weakened position that some of these G7 leaders come here to try to discuss and hash out global issues while they have some fairly large issues domestically at home.
Yeah, indeed. I mean, we've seen pictures there of Rishi Sunak, of course, facing those election risks here in the UK, July the 4th. Macron, Olaf Scholz, of course, facing that threat from the AfD. We're seeing pictures of the skydive there, and it's pretty dramatic. But as you say, there's some analogies, there's some symbolism there as well that maybe they wouldn't want to draw. When it comes to unity then, so we focus on the technicalities of this Russia asset deal and how they implement that and the potential roadblocks from countries like Hungary, a bit of a bête noire now within the European space. When it comes to agreements or disagreements on the China question, and particularly when it comes to tariffs on Chinese EVs, there's been some back and forth on this. Germany has a position that is opposed, it seems, to the position in Brussels. Talk us through what is happening in terms of the discussions on that front.
Yeah, Tom. So listen, for the United States, obviously, probably above all, it is really important for them to get language, common language on China, particularly on the trade issue. But it's bigger than just the trade issue, right, Tom? They're trying to pitch a much larger tent here at the G7. They've invited the leaders of Turkey, of Argentina, Brazil, Kenya. You know, they're sort of very cognizant of the fact that the G7, potentially with sort of waning influence, and as China comes up, they really need to make this sort of pitch to more broadly across the world. So I spoke to Charles Michel yesterday about this sort of China issue. Here's what he had to say about what they sort of hope to get out of it at this meeting.
This is very clear that we want to rebalance the economic relationships. We want to diversify our supply chains. And we think that it's very important to develop supply chains that work well for the benefit of our citizens all across the EU. And that's why we coordinate the way we want to engage with China in that field.
And Tom, I think that the China question is a particularly interesting one because it also ties into some of these other questions about developing nations and also immigration, which is a big topic here. I mean, very often at these G7 meetings, we have all these conversations about helping developing nations, but they don't go much further than sort of conversation. And when you think about sort of the role that China has played in many of these nations, let's take Kenya, for example, whose leader will be here today. When I was there 2 years ago, I mean, there's a huge amount of infrastructure there built by China. And often, I think the West and the United States and the leaders here, this is part of the conversation, are cognizant of the fact that they are not really doing enough on the ground there. So as a sort of response to that, there has been an announcement of a $4 billion fund that's going to be backed by BlackRock and some other sort of investors to try to help that development. But of course, Tom, we always need to take this in this sort of geopolitical context of this fragmenting world order.
On the fragmented world order question, and look, you nodded to this, Ollie, in your previous answer, or at least your comment around the Trumpification, Trump-proofing some of this policy from the G7. To what extent does a potential President Trump, post-November, of course, loom large over this meeting?
I think it looms very large, Tom. I mean, there's so many unknowns around Trump and sort of what the presidency could look like, whether it's the support for Ukraine, whether it's the support for NATO. Obviously, defense is a sort of major issue here, Tom. But we're also talking about Orban-proofing this aid, right? We're talking about doing a lot of proofing here at the G7 with leaders who don't necessarily have a mandate as strong as they had previously. So I think that this is a sort of large part of this. There's a lot of sort of ensuring that their legacy sort of gets through and that they are able to push these things through, when, not necessarily they're going to, be in power to the same degree. So I think that this is a very large conversation here, Tom. And I think that this sort of, in terms of where Biden is and sort of dealing with all of these issues, is that the Trump presidency would loom, extremely large over all of these discussions, Tom.
OK, Bloomberg's Oliver Crook, fantastic work live for us in Italy for the annual G7 summit. Ollie, thank you. Now to some other stories making the news this Friday. Left-leaning political parties in France have sealed an agreement, an alliance for the upcoming legislative election. They will field only one candidate for each district for the first round of voting on June 30th. Polls suggest the bloc could become the second biggest in Parliament, behind Le Pen's national rally, dealing, of course, a potential further blow to President Macron. In South Africa, political parties there are continuing talks on forming a new government. Hours before, President Cyril Ramaphosa is scheduled to seek re-election as head of state. According to the ANC Secretary-General, the centrist Democratic Alliance, the Inkatha Freedom Party and the smaller Patriot Alliance have opted to join a proposed government of national unity. The ANC was forced to seek an alliance after it lost its parliamentary majority last month. And sources say Donald Trump has told US CEOs he's going to cut the corporate tax rate by 1 point to 20% if he wins the November presidential election. The likely Republican nominee met in Washington with around 100 CEOs, including JP Morgan's Jamie Dimon, Apple's Tim Cook. And Trump cut the rate to 21% in 2017, but is said to have told the corporate chiefs that 20% is a nice round number. Coming up, the green trade war. We take a look at how EU tariffs on Chinese EVs will impact efforts to reach net zero on the road. That is next. This is Bloomberg. Welcome back. Now, Bloomberg has learned that the German government is working to prevent or soften the EU's new tariffs on Chinese EVs. Officials in Berlin are reportedly optimistic the bloc can find a solution in direct talks with China. German officials say they see wriggle room with some EU allies, but need both the bloc and Beijing to move forward on a potential agreement. The new tariffs take effect on July 4th. And the EU has waded into the green trade war, announcing this week it will increase tariffs. That's part of that story, of course, on electric vehicles imported from China. And we'll see to what extent the Germans can roll those back. This comes after the Biden administration lifted duties to 100% last month. So tariffs have been raised both in the US and Europe on these Chinese EVs. What does this mean then for the EV markets? Joining us is Colin Makaracha, Bloomberg NEF's head of advanced transport and energy storage. Colin, great to have you for the details. There is this tension then in terms of the climate targets and some of these protectionist measures. How are they impacting the EV market?
Yeah, I think what you're going to see and what you're already starting to see is much more localization of auto production and particularly of EV production. So these tariffs that the U.S. put in place and now the EU, that's going to push Chinese automakers to build in the U.S. or to build in Europe in this case. They're not very active in the U.S. But so I think that's one of the big parts is more localization. It is also going to slow down EV adoption a bit. A lot of the countries that have been pushing for more EV adoption have been really missing these affordable, cheap entry-level models. The Chinese automakers, many of them do provide those, and by adding tariffs to those, that's adding cost to end consumers. So that will probably slow down EV adoption a little bit in the near term.
We've seen there's been a lot of talk, and corporate executives have been talking about this in the auto space, around the slowdown in demand for EVs. Where are we on that front?
Yeah, you've heard a lot of negative headlines over the last year saying EV sales are falling or they've fallen off a cliff or they're grinding to a halt. That's not really what's happening. In absolute terms, EV sales are still growing. We're projecting them to grow about 20% this year. And that's actually held up so far in the first quarter of this year. So EV sales still growing. The growth rate is slower than it was in past years, but you're still going to see about 17 million of them sold this year. And that's about 1 in 5 cars. So that's 1 in 5 cars sold in the world this year will have a plug. That's a remarkable growth story from where we were just a few years ago. So,
all right, that context is really important.
Yeah, the growth rate is slowing,
just briefly, okay, that's really important context. Projecting forward then, what is the outlook from you and the team for EVs?
The outlook is still quite bright, and that's because the underlying technology continues to improve. So battery prices continue to come down really rapidly. We're seeing battery prices of under $50 a kilowatt hour at the cell level in China. That's, again, a remarkable drop from where we were just a few years ago. That'll start to trickle into other international markets in the years ahead, and that's what will really drive adoption. More cheaper EVs that consumers can buy in every different price point and every different segment. So the EV adoption outlook is still bright. We're nowhere near the end of how good a battery or an EV can get, and that will continue to drive adoption in the future.
Smart analysis. Colin Makaracha, Bloomberg NEF's head of advanced transport and energy storage, with the details and the context there in terms of what's happening in the EV space. Coming up, staying with some more details on that. Tesla shareholders approving Elon Musk's $56 billion pay packet and his plans for a move to Texas. We'll bring you the details next on that story. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. The yen weakens after the BOJ holds rates and says it will lay out plans for reducing bond buying at its next meeting. We break down the numbers ahead of Governor Ueda's press conference around 7:30 UK time. The S&P notches a 4th straight consecutive record. European futures point higher. The French bond rout deepens amid concerns over a surging far right in upcoming elections. And Reform UK leader Nigel Farage declares his party the opposition to Labour after a new poll shows the Brexit architect's party ahead of Prime Minister Rishi Sunak's Conservatives. Let's check in on these markets then. It was tech once again powering the highs for the S&P, a fourth straight consecutive record coming through. Adobe and the likes of Broadcom, Tesla also lifting the S&P. European futures pointing to gains of 0.3%, but it's been a divergent picture, and we'll see if European stocks can turn around and end the week in the green. FTSE 100 futures pointing to gains of 0.3%. The S&P looking to add very modestly, just 2 points to that record that came through yesterday. Nasdaq futures pointing higher by 0.2% and closing in to that 20,000 level. Let's flip the board and look cross-asset. You had further detail, further evidence that inflation is starting to cool in the US. And, of course, that is playing in to expectations that the Fed can go at least once this year with a cut, with producer prices falling the most in 7 months. The US 10-year at 4.26, below that 4.30 level. Yields up just 2 basis points today after yields moved lower yesterday. The Japanese yen under pressure, of course, down 0.6% on less than hawkish comments coming through from the BOJ. We await, of course, the commentary from Ueda, the governor, at 7:30 UK time. Euro-dollar at 107 after a bit of a challenging week for the single currency on the politics of France. And Brent trading lower, 0.4% lower in the session, $82.45 on Brent. Let's cross over to Asia. Avril Hong standing by in Singapore for a check on the Asian markets. Avril.
Yeah, Tom, and the focus is on the Japanese currency as we wait to hear what Ueda has to say. Let's also keep in mind that after April, in his presser, his comments actually managed to send the yen about 3 days later towards levels that prompted intervention. It was a very expensive exercise, $60 billion from the Japanese finance ministry to support the yen. So this is at stake as we look into what we're going to hear from the BOJ governor. Meantime, these are the peers that the Japanese yen is losing ground against. I mean, we always knew that coming into the decision today, there was a chance that the BOJ would be quite classic in terms of not giving the markets what they expected in the normalization of policy. That's only what we got. And the bond futures in Japan are also climbing against that backdrop. Interesting also to highlight what we're seeing on the yen versus the renminbi. As we talk about how the weakness might be affecting export competitiveness, keep in mind today the PBOC came in with a yuan fix at the highest rate since January. It makes you wonder how Chinese authorities are thinking about the Japanese yen, especially with an MLF decision due on Monday. And the base case is for things to be kept unchanged, but Bloomberg Economics does expect a bit of a reduction. Let's flip the board and take a look at the stocks in focus in Japan as well, because as you know, those automakers tend to benefit from a cheap Japanese currency. We are seeing them pairing some of the earlier losses, but not by much. Maybe that caution ahead of what Ueda has to say. Highlighting as well what we're seeing among the Japanese lenders, a rate increase would in theory be good for their profitability, but given how that odds seem to be reduced now, we might not see Bank of Japan at the next meeting that talks about the reduction of bond purchases and rate hikes at the same time. So those rate hikes might have to wait, and so do the Japanese lenders. Flip the board again, just very quickly taking you through what we're seeing in the major gauges across the region. That's green on Japan, and we're seeing a bit of a mixed picture in Chinese equities. Tom.
Avril Hong on the reaction, the asset reaction, of course, to what we've been hearing from the BOJ as we count down to the press conference from the governor. Avril, thank you very much indeed with a deep dive on the Asian markets. To UK politics now. And Reform UK leader Nigel Farage has declared his party, quote, the opposition to Labour, after an opinion poll showed it had overtaken the Conservatives for the first time. And it's just one poll, but it's the latest evidence suggesting that Prime Minister Rishi Sunak is heading for a heavy election defeat. Joining us now for more is UK correspondent Lizzie Burden. Lizzie, how significant is this then, really?
Well, let's just run through the numbers, Tom. It's a YouGov poll last night. It puts Reform on 19%, the Conservatives on 18% and Labour on 37%. So you're right to say it's 1 point, one poll, but it's a symbolic crossover moment for Reform versus the Conservatives. It could foreshadow 1993 Canada moment for the Conservatives, a wipeout moment. And interestingly to me, if you add together the Reform share with the Conservative share, you get the Labour share of this poll. So perhaps this is a equation that's going to haunt the Conservatives after the election when thinking about the leadership. Now, Farage in response has said that a vote for the Conservatives is now a vote for Labour, turning the Conservative allegation on its head. And this was in a televised debate with the Conservative Cabinet Minister Penny Mordaunt. In fact, Tom, the truth is, in Britain's first past the post system, this is not quite the reality yet. Nigel Farage would like to have some electoral reform, but we're not quite there yet.
Yes, certainly. If there was proportional representation, it would be a very different political landscape, wouldn't it, given the polling? We'll see if this poll is repeated in other polls, of course, but as you say, it taps into that ingrained fear within members of the Conservative Party. Talk to us then, and you touched on the polling around Labour, 37% out of this latest poll. We got the manifesto. What details stood out to you from this document?
Well, I'd say as a theme, caution. 133 pages of it. We had no new policies. We've been hearing for the past year that economic growth is the priority for the Labour Party. And Keir Starmer, the opposition Labour leader, was in Manchester announcing this manifesto. Keir Starmer was saying that he is not going to raise any of the three main taxes in the UK, VAT, national insurance or income tax. And just to state the obvious here, Tom, this is a manifesto pledge. So if they do raise any of those taxes in government, it would be a serious promise broken. But it leaves Labour hemmed in fiscally here. We've had the Bloomberg economics analysis saying it stumps up £4.8 billion of a £20 billion black hole in the public finances. And the rest of it is going to have to be covered by real terms public spending cuts. The Institute for Fiscal Studies says this manifesto does not detail how to finance a plan that would affect real change. And the Institute for Government says voters are in for a nasty shock because it's not going to give enough growth fast enough or significantly. So my key takeaway from this is they do not want to trade their stonking poll lead for a mandate to do more, but this is the post-Truss economic consensus. Pursue growth, don't upset the bond market, and it's the same as we laid out in the Tory manifesto earlier in the week.
Yeah, and to your point, interesting to hear from Ed Balls, former Shadow Chancellor, of course, in the Labour Party, saying that they'd essentially hem themselves in with this manifesto pledge. Lizzie Burton breaking down what we saw, of course, from Labour and the significance and the context around the polling and the boost coming through for Reform UK, at least on one poll and at least in terms of the challenge for, of course, the incumbent Tory party. Now to Europe, where leaders are still dealing with the fallout of last week's European elections, as well as discussions about Ukraine and defence for the EU. European Council President Charles Michel spoke to Bloomberg's Oliver Crook at the G7 in Italy.
The most important thing, in my opinion, will be the strategic agenda. What is the strategic agenda? This is the program that will be agreed in the weeks to come, probably by the end of June, by the 27 leaders, the 27 head of state, head of governments. They have a clear vision about what should be the priorities for the next 5 years.
What do you think changes? What in those priorities changes as a result of the vote?
There is, on the one hand, you have the European Parliament with the legitimacy of the elections all across the EU, this one thing. But this is the responsibility of the European Council to provide the strategic orientation for the future of the EU, and we are doing our job, and that's why in the weeks to come we'll make this very important decision. And I can tell you there are two important priorities. The first one is more prosperity, better regulation, smarter regulation, more competitiveness, more investment, point one. And point two, we are determined to do much more in the field of defence and security.
Do you think that there could be a decision on top jobs by Monday? Because it seems like things are firming up.
Look, the leaders will have to make a decision, and it's my task to unite the leaders, to help them to make a decision, and this is my main focus.
And speaking of that leadership, there are a number of leaders now within that cohort that have been really weakened by the European elections. We know what's going on in France, we know what's going on in Germany. How do you think that will reflect in the sort of conversations at that level? You need sort of leadership in Europe.
I'm very confident that the European Council, which is a unique body because it's a gathering of 27 leaders, head of state, head of government, we have the political influence, we have the political legitimacy to make the fundamental decision for the future, and this is what we are doing.
And are you concerned about the outcomes of the French election? Do you think that a weaker France makes the task of the EU harder?
I am very confident that the European Council and all the leaders within the European Council, they are ready to play their role and to make bold decisions for the benefits of the EU.
And as we know, leadership is also very important in Europe, as we've been talking about. Do you think that Giorgia Meloni, who's come out much stronger in this, can emerge as a sort of European leader?
It's not my intent to make this kind of assessment. My goal and my responsibility is to unite the European Union and to make this European Council the guardian of the European unity. And this is what we managed to do the recent years, including on difficult topics. We have seen that systematically COVID-19, climate change, the war against Ukraine, the need to rebalance the economic relationships with China, on all those topics, systematically the European Council made decisions and strong decisions in a spirit of unity.
OK, the self-appointed guardian of European stability there. The European Council President, Charles Michel, speaking to Bloomberg's Oliver Crook, of course, on the sidelines of that G7 meeting. And part of the conversation was around EVs and around tariffs, around China. Talking of EVs, Tesla investors have backed CEO Elon Musk's pay package and moving the company to Texas. The shareholder vote was seen as a referendum on Musk's leadership after slumping sales and a drop, of course, in the stock price for Tesla, year to date at least. Musk spoke shortly after the result was announced, where he also touted Tesla's AI capabilities.
And Tesla is also the leader in real-world AI. So there's really, this is a big deal. Like Tesla is ahead of Google, Meta, OpenAI, anyone on real-world software, actually taking in video and making decisions based on video. No one is even close, and it's getting better.
OK, let's bring in Bloomberg's Danny Lee for the sake on this, been waiting patiently for us on this story. Danny, talk to us about the significance then of this announcement in terms of the pay package and the move to Texas.
Well, I think at the very top, when we talk about the references to Elon talking about AI, for investors, for the meantime, this means Tesla, Elon Musk, they're not going to be splitting apart here. The idea that Elon Musk could take his AI ideas away from Tesla and really undermine the valuation, which really depends on Musk himself and AI. But as you said at the top, this idea that this investor vote, the resolutions on Musk's massive pay package and moving this state of incorporation, which has now happened from Delaware to Texas, felt like a referendum on the company. But this result, and after this AGM, which happened hours ago now, this just means that there is strong confidence in Elon Musk and his leadership. And this really comes across the backdrop of lagging sales and a share price, which has slipped as well in recent times. But Elon Musk had fought hard, along with all the fans on X, Tesla, trying to get this vote over the line. And we got a hint from that yesterday from Elon Musk that this vote would succeed and really happen later on with the backing from key institutional investors.
OK, Danny Lee, thank you very much indeed with important insights in terms of what we've been hearing, of course, in the AGM and Elon Musk of Tesla, that vote of confidence in the Tesla leader coming through from shareholders. Danny, thank you very much indeed. There's plenty more coming up. We're going to do more analysis and assessment in terms of what we've been hearing from the BOJ. That's coming up. This is Bloomberg. Welcome back. Now, the yen weakening after the BOJ's decision to hold rates. That was not a surprise, of course, but the central bank said it would reduce debt purchases, but delayed providing details until the next policy meeting. The Japanese yen currently trading at close to 158, 157.98, down 0.6% versus the US dollar. Let's get more context then and analysis and bring in Adarsh, Sinha, co-head of Asia FX and rate strategy at Bank of America, BofA Global Research. Adarsh, good morning. Thanks for joining us. Was this a relatively dovish decision from this Bank of Japan? What was your assessment so far as we lead up to that press conference?
Good morning, Tom. So, I mean, if you look at the market reaction, the yen is weaker, JGB yields are lower. So, yes, it was dovish. That said, we did think there was a reasonable risk that they would delay the decision, or at least the details, on the JGB purchase reductions to July. We were a bit wrong-footed by the Nikkei article yesterday that suggested that they were discussing this and they were likely to announce it at this meeting. But I think in that context, where the market was expecting not just a reduction to be announced, but the amount to be reduced from 6 trillion yen to 5 trillion yen, and we didn't get those details. So in that sense, it was a bit of a disappointment, and clearly the price action shows it was viewed as dovish.
Yeah, as you say, look, you and the team called it. So if you've been reading those research notes, you'd have got a good steer on this in terms of the bond purchase decision and kicking that down the road. In terms of your what are you and the team thinking about then in terms of how far they go on quantitative tightening post July?
Yeah, so ironically, even though today's decision was viewed as dovish, I think what we've heard is basically they're going to consult with market participants, and they're going to present a 1 to 2 year roadmap of JGB purchase reductions at the July meeting. Now, the July meeting is at the end of July, so it's going to take some time. But I do think when we get the announcement, there's actually a chance that the JGB reductions could be a bit larger than what the market has been thinking. The very fact that they're going to consult with market participants and that they're going to present a long-term roadmap tells you that eventually the reductions could actually be more than expected. So, I mean, of course, that's a story for another day, and the market's not really going to care about that now. But I think medium term, we're actually thinking that the JGB reductions might be quicker, based on what we heard today.
No, that's really fascinating. That's really fascinating. But as you say, look, we're thinking the here and now as well. We have the press conference at 7:30 a.m. UK time. How fine a line will Governor Ueda have to walk in this press conference?
Sure. Look, on the JGB purchases, I think it's quite straightforward for him because the statement said everything it had to say. So, all he's going to say is we'll speak to market participants and we'll provide the details at a later point. So I don't think it's going to be too difficult communicating that at the press conference. The trickier part is going to be the prospects of a further policy rate hike. So the market has reduced the probability of a rate hike at the July meeting. I think it was around 65% probability before the Bank of Japan meeting. Now it's closer to around 40 to 45% probability. So kind of finely balanced. So that's really where Governor Ueda will have to tread a fine line in terms of will he push back against expectations of a rate hike in July? I think that's unlikely. And also, I don't think it's that difficult for the BOJ to hike rates in July and provide the details of the JGB purchase reductions at the same time. So I suspect what he'll do is what central banks normally do, is he'll say we're data dependent. It really depends on economic conditions leading up to that July meeting. And then we'll decide whether we need to hike policy rates or not. But I think that's what the market will be focusing on in terms of his press conference comments.
And for now, where do you land in terms of the number of hikes they can push through this year? Where do rates end the year in Japan?
Right. So we're sticking to a rate hike in July, and then sort of a follow-up rate hikes in 2025, taking the terminal rate to 0.75%. So we haven't changed that view, and we think a July rate hike is still very much on the cards. But of course, as everyone, will be watching the data, and we'll be watching the Bank of Japan's communication over the next month and a half.
Very, very briefly, before we let you go, next level for the yen.
Oh, so the yen's going to be interesting. I think people kind of think 160 is a line in the sand because that's where they intervened, but we think there's a good chance we get above 160. Part of the reason is we're seeing structural outflows from Japan that will continue from both the corporate and the household sector, but also volatility. When they intervened, volatility in dollar yen was above 10%, 10% if you look at 1 month implied vol. Right now, we're nowhere close. We're below 10%. We're, I think, maybe 8 to 8.5%. So I think if we get a move through 160 and volatility doesn't pick up, we probably won't get intervention immediately.
OK, fascinating. Adarsh Sinha on the yen potentially getting past 160. Co-head of Asia FX and rate strategy at Bank of America Global Research. Really smart take there in terms of what to expect from the BOJ. As we look at the yen breaking through 158, 158.10 right now, down 0.7%. Plenty more coming up. This is Bloomberg.
It's worth recalling that last year, almost all economists, I think it's fair to say, were predicting that we would have a recession. That's something we've avoided, and we now continue to see solid economic growth.
Treasury Secretary Janet Yellen speaking there with New York Fed President John Williams at the Economic Club of New York. Worth noting that producer prices, of course, the PPI index out of the US came in much softer, the softest level in about 7 months, well below all the estimates, and just suggesting that the moves lower in terms of cooling inflation, cooling prices does continue in the US, and that feeds into the Fed's preferred gauge as well. By the way, it's been a really big week in terms of auctions by the US Treasury in the US, and they've been well absorbed by this market. The most recent auction, $22 billion US of 30-year longer dated treasuries. You had a bid to cover ratio of 2.5. That's well below. That's well above, I should say. That's the highest level in terms of bid cover. That's the best bid cover they've had year to date in terms of the appetite for 30-year bonds. So it just suggests that markets can absorb this. They're trying to lock in yields. Maybe it's a bet that yields move lower from here. But either way, the bond vigilante story around the run-up in the deficit in the US is not coming to play, at least not for now. Let's flip the board and look quickly on what's happening, because European bonds, French bonds, really in focus given the spread and that differential versus German bonds. 70 basis points now, close to 70 basis points in terms of the spread. You have seen 20 basis points tick up in the spread just this week alone on the political risks out of France. This is the biggest spread that you've seen since 2017, about 7 years then. And by the way, the markets, and you can see that spread pick up here. There's the tick up that we've seen just this week. The markets suggest that there could be a further rout in French sovereign debt. So that is a story we continue, of course, to keep an eagle eye on. Plenty more coming up, including Loretta Mester, the outgoing Cleveland Fed president, going to sit down with Bloomberg's Mike McKee for an exit interview. Markets Today, though, is up next. This is Bloomberg.